If you are a pensioner in the UK, or someone supporting an older relative, this update could affect you directly. The phrase £300 HMRC deduction pensioners 2025 is circulating for a reason. The HM Revenue and Customs is in the process of recovering certain payments made previously to pensioners, and the mechanism is now in motion. What this means is that a payment you either received, believed you were entitled to, or never knew about may now trigger a deduction of up to £300 or more from your future pension income. But the really tricky part is that this isn't always obvious until you open your tax code letter or bank statement. In this video we'll unpack what the deduction is, why it's happening, including the connection with winter fuel payment rules. Who is at risk, how to check your tax code, what to do if you believe a deduction is incorrect, and how to protect yourself from unexpected falls in pension income. By the end, you'll know exactly what to check and what to ask HMRC, because catching this early may save you real money and stress. Many pensioners assume they have no tax risk, but this deduction proves differently. The trigger often relates to income thresholds and previous payments being clawed back. Too many older individuals only discover the deduction after several months of reduced pension income. Being proactive now means you don't find yourself scrambling. What is the £300 HMRC deduction for pensioners? The deduction being referenced refers to cases where pensioners receive certain payments, for example the winter fuel payment or similar allowances, but then find themselves having to repay or have money clawed back via their tax code or self-assessment. For instance, a household containing someone aged 80 plus might receive a £300 winter fuel payment, but if taxable income exceeds a set threshold, such as £35,000, the full amount may need to be recovered by HMRC. Thus, the headline of £300 HMRC deduction pensioners 2025 reflects the maximum deduction many pensioners may face under these rules. It may appear as a deduction in your tax code, reducing your pension payments monthly. It may also come through self-assessment if you file taxes. The deduction is often automatic and you may not receive a separate warning. For some pensioners, the deduction will follow a payment they believed was a benefit, but later found to require repayment. Understanding this is critical. What appears to be free money may in fact carry repercussion. Why is this deduction happening? There are a few key reasons. The winter fuel payment system has been remodeled, the qualifying payment of up to £300 for households where someone is 80 plus has been retained, but the government introduced an income cap, e.g. £35,000, so that those earning above may have to repay via HMRC. HMRC expects accurate income data and uses tax code changes to claw back amounts from individuals who should not have kept full payments. Pensioners may not be aware of these thresholds or the later administrative recovery via tax codes, leading to surprise deductions. The complexity of national insurance, pension income, savings interest and taxable earnings means more risk of being in the repayment required group. In essence, the deduction arises because a payment that was initially made automatically is later judged as an overpayment, and HMRC is issuing the recovery. Who is affected? Income thresholds, dates and conditions. To understand whether you may be impacted by the £300 HMRC deduction pensioners 2025, consider the following. The relevant payment, e.g. winter fuel payment, may have been made in November to December and applied to those born before certain dates, for example before the 22nd of September, 1945. The income threshold, for example taxable earnings over £35,000, applies. If you exceed it, HMRC may reclaim the payment. The deduction may begin via your tax code from April of the next tax year or via self-assessment if you submit a return. If you opted out of the payment or your income is below threshold, you may be unaffected. This means pensioners with earnings, pensions, savings or top-up income nearing or above the threshold must check carefully. How HMRC makes the deduction. Here's how the mechanism commonly works. After payment is made to you, HMRC reviews your taxable income via data matching. If you're above the threshold, HMRC changes your tax code for the next year, e.g. 2026-27, to deduct the amount gradually monthly. If you file a self-assessment tax return, the amount will be included in the next return and may create a tax bill. The independent. Sometimes the deduction appears as a negative payment or adjustment in pension or state pension payments, reducing the net amount. You may receive a letter from HMRC indicating a simple assessment showing the deduction basis. Being aware of this helps you avoid surprise changes in income and plan accordingly. Real-world examples and impact cases. Let's look at practical cases. A pensioner born before the 22nd of September, 1945 received a £300 winter fuel payment. With additional taxable income, private pension plus savings interest, exceeding £35,000, HMRC adjusted their tax code in April 2026 to recover the full £300 in installments. Another pensioner with an earnings just under the threshold kept the payment but later found a small savings interest increase pushed them over, resulting in a partial recovery. A couple both over 80 received £300 each, but one spouse had a high personal pension. HMRC clarified they must repay via tax code even if household income seemed fine. These cases reveal how small financial changes or timing can trigger the deduction. The headline £300 HMRC deduction pensioners 2025 sums up a significant shift in how benefit payments and income thresholds interact for pensioners. While the deduction is legitimate for many, it may feel unexpected if you weren't aware of the rules or reviewing your tax code. By staying alert, checking your details and acting early, you can protect your pension income and avoid financial shock. If you found this video helpful, please like, subscribe for more updates on pensioner finances and tax issues, and share this with friends or family who may also be affected by the £300 HMRC deduction pensioners 2025. Comment below, have you seen any change in your tax code or payment amount? What steps did you take? Stay informed, your future income matters.